How difficult is it to predict market? It feels like everything is interlinked more than it was in the past, right? You have a Hong Kong protest now linked with trade. Like, it just seems like it's all, one thing could go wrong or go not to plan, and the rest would be a house of cards.
Well, a lot of the issues are actually trade related if you think about it. So you mentioned that the Hong Kong protests feed into this big sort of trade war that President Trump has sort of enacted. Brexit's also about trade. A no-deal Brexit would affect EU, UK trade, but also third country trade. I think this is holding the world economy back, but the fundamentals underneath are actually getting a lot better. So if you step away from the noise, you've got central banks cutting interest rates, inflation's low, the US housing market's getting stronger, leading indicators are actually turning up for the first time in about 18 months. I think if we can get through some of this noise, actually next year is going to be quite a lot better for financial markets.
But are central banks a hindrance or help?
They're a help, but I think they need to do more. And our attitude to this is we're relatively positive on the equity market outlook, given these improving lead indicators. If things get worse in the near term because of, and you can name one of a list of things, Hong Kong, Brexit, China, stress in the Middle East, as long as there isn't a sustained rise in oil prices, I think central banks will flood the world with more liquidity. So they're already cutting rates. The worse things get in the short term, the more they'll cut, and the more impetus you'll get for next year. So we're getting to almost to the stage where bad news on the economy is good news.